So Gerard, welcome to the Crypto Princess show. Today we're going to do a crypto story. How are you?
Doing well. How are you?
All good, all good. So Gerard, the resident question I ask all my guests is, if I was to meet you in school, what kind of person were you?
Kind of a typical young kid that didn't really know, wasn't really very self-reflective, we'll say. Uh, you know, Serious about sports, loved playing golf, tennis, baseball, basketball. Wanted to be a professional in most of those. Golf became kind of the one that I maybe had the most aspirational reality towards because I was small. But as a kid, I was, I had lots of friends socially, but wasn't really a partier. So, it was more of kind of the surface level friendships. I suppose I'm not sure. But then, kind of got good at golf junior, senior year and decided to, be able to play in college.
I hear you are very good at golf.
Well, I mean, there's many people that are much better than I am, but, good enough to play in Division III and play in national championships, was a 3-time All-American. But I like to really kind of crack through and become a professional. It turned out to be my own kind of mental hangups at that point that was holding me back. So I tried to qualify for the U.S. Open in 1997. After my summer of my freshman year at school, and played amazingly well, but just missed a bunch of short putts that, it really came down to just kind of choking under the pressure. And it happens once, you think it's kind of a one-off. Happened again, another qualifier, and a friend at the club that I belonged to handed me a book called Golf Is Not a Game of Perfect. It's basically a psychology book, and it definitely helped, my game continue to get better through my sophomore season and even into my junior year. But, when I was playing in big national events like the U.S. Open, like the U.S. Amateur, I just kind of continually fell short. So I began to kind of see psychology as an avenue for, profession, right? Because if I could solve my own issues, then maybe I'd have a career that, I'd be able to help others do. And worst case, I could still have an option to play professional golf in the future. So my junior year of college, I added a psychology degree to my business degree. And, business degree when I was coming in was basically just a backup plan. Now, psychology started to kind of take hold. And so I graduated from university, went to get a master's degree in counseling psychology, basically reasoning that I can kind of combine sports psychology, which I knew quite well, golf psychology, with, therapy, and find a different avenue for problem solving, because I felt like sports psychology, golf psychology was just a little too surface level. You're feeling too much pressure, we're going to teach you to relax. You're not feeling confident, we're going to boost your confidence. It was kind of just too kind of basic in my mind, and it didn't work for me. So we could kind of do some deeper problem solving, then maybe we could find some answers that would really, transform, my ability to perform under pressure and realize my potential. And again, maybe do the same for others.
Okay, so you went off to university, you were studying business, you added psychology, you liked the psychology, and then after university, did you go down the golfing route to help golfers with their psychology?
Yeah, so I basically graduated Northeastern with a master's degree, spent 2 years getting licensed as a therapist. So technically I'm a shrink, but I've never practiced as one. 2005, quit my job after having done all the credentialing, fly to Arizona to start working with golfers because it's just a hotbed for golf there. Started building up a practice at a club with a swing instructor, a physical trainer, and me. I was kind of like the third leg of that puzzle, trying to work intensively with players that were serious about the game. And so built up a nice roster of junior players, amateurs, some, semi-pros, and, actually fairly soon worked with a gal who won on the LPGA tour. So that was pretty cool. And so, building up this kind of roster of clients. But what I found was it was a little bit difficult to kind of create the breakthrough and really get players to work on their psychology the way that I wanted them to, because they kind of saw it as something that should have been kind of quickly to fix, right? You understand kind of what's happening, but you believe the changes should happen very quickly. And frankly, a lot of people make that mistake with psychology, with their emotions, with their mentality. You would never go to the gym thinking, oh, tomorrow I'm going to have bigger muscles. But so many people think that tomorrow they can have a mentality that's capable of operating very differently from what they are now. So it just was hard to like really build up that practice. And ironically, I met a poker player on the golf course who used to be a professional, and he saw the parallels immediately. Always kind of wanted somebody like me when he was playing professional golf, and kind of turned to poker after his career got derailed. And at this point, this is 2007, 2006. He's playing online poker, playing 10 to 14 tables on Poker Stars and Full Tilt Poker, and making around $20,000 to $30,000 a month. But he had massive anger issues, massive tilt problems. He was punching the monitor, slamming his mouse, breaking keyboards, because the variance in poker is just intense. As it is in trading, right? You don't have firm control over short-term results. For the most part, you do in golf. Golf has certainly a lot of bad luck, good luck that is involved in the game, but not nearly the same as it is in trading and investing, or in poker. So he was just kind of struggling with with that issue, and we did 4 or 5 sessions over the course of a few months. In that time, he makes 600 grand, and it turns out he's part owner in an online training site. This is kind of the beginnings of online poker training, and invited me to start coaching. Now, I played poker as a kid, in the summertime, play for nickels and quarters, and but serious professional poker was very, very new to me. So I had to kind of really have a game plan for training poker players on my stuff, and worked intensively hard to create a program for that. And it really kind of unlocked a lot of insights for me about kind of how to really not just manage problems, but really to solve them. So I kind of had a lot of intuitive ideas, and it was in that kind of poker incubation period where I did that. And
so how difficult or how different is it from going from golf to poker to crypto?
So at the end of the day, we're all people. And it's just a question of understanding how people interpret their particular issues, understanding enough about the context to be able to know how they're performing, how they're operating, how they're thinking. So yeah, it takes a little bit of time to kind of immerse myself in that environment. And, early in poker, I was, on forums and answering questions and interacting with a lot of different poker players, and just kind of learning the lingo, learning, the cadence and the different nuances of both the game and the online sites, and what it's like in live poker, and what their preparation looks like, and study. And just kind of understanding the issues that they're experiencing. But they were all the same that I saw in golf. They were just magnified. And then, you make the transition to trading, and same deal, right? It's slightly different language, although there's some borrowing terms, right? There's certainly a lot of traders and people in crypto who talk about the term tilt, fairly ubiquitous. It didn't come from poker. It came from pinball, where you just quite literally tilt the machine when you get angry and try to get the ball to go where you want. So, it takes some time to do that. I think it takes a desire to want to understand how people operate, but we're human beings, right? Our DNA is 99.9% the same as a chimp. So we're not that unique from each other. We deal with a lot of the same issues, but the way in which we individually experience them obviously is different, both within trading, within crypto, within poker, within golf. But when you look across the gamut, high performance in general, has a lot of the same kind of fundamental components to it. And yeah, it's not an overwhelming task. It just takes, the dedication and the time to do that.
Mm-hmm. We'll get onto the books in just a moment, but was it 2013 that you started to accept crypto payments?
It was, yeah. I think first I was getting basically, a Bitcoin and a quarter per session at that point.
Oh gosh. So for those people who don't know,
I wasn't holding it, by the way. We were saving for a house. I was liquidating it immediately. So no, I'm not a crypto OG holding, a large bag here.
For those people who don't know, 2013 was exceptionally early. So Bitcoin, the Genesis book, was on the 3rd of January 2009. 2013 was the first Bitcoin bull run. Super, super early. So when you started to accept crypto, was it quite easy to set up your account, all the rest of it?
I mean, Coinbase was kind of the only, mainstream exchange that made it easy, although they certainly took their share of a piece of it for that. But for me, as a somebody kind of new to it, the poker player who was sending it to me, helped me get it set up, and it was incredibly easy at that point. But like I said, I was liquidating immediately.
Okay, so your first book, you wrote your first book shortly after. First of all, what year
Shortly
did you?
before 2011, The Mental Game of Poker came out. 2013.
2011. So the mental game of poker, and then in 2000 and is it 21, you wrote the mental game of trading. Tell me about the 2021, the mental game of trading. Why did you write the book?
So like I said, poker player or traders basically said you could take the poker book and just change the word, but that's not my style. Like, I wanted to really make a robust book for traders. And yeah, I mean, I was just getting more and more clients. I saw the opportunity. There are a couple other like really good trading books out there at the time. Trading in the Zone is still a book I recommend because it does teach you more about the psychological components to this endeavor. But to me, it left a big opening for solving the same kinds of problems that I saw in poker and in golf with traders in a much more robust way. So that's what the book is really designed to do. It's not for new traders. I mean, you got to have some understanding of what the issues are that you're experiencing, whether it's with greed or with FOMO or revenge trading or overconfidence, lacking confidence, discipline issues. I mean, those are kind of the big problems that the book addresses. And to have something that was really robust is what I wanted. And at that point, we're talking now almost close to a decade where the mental game of poker 1 and the mental game of trading are kind of on the same page. If you're looking to pick one, obviously, if you're in crypto, if you're in trading, pick the mental game of trading. But so it had been close to a decade at that point, when I started working on it, that it just kind of left a lot for my system to be upgraded in a sense. And whenever I'm writing or whenever I'm putting together a video series, a course, it forces me to consolidate my content and my approach in a way. And so the book kind of gave me an opportunity to do that. So it is a massive upgrade. I wouldn't just have said, I'm just going to change that, all the words from poker to trading, because there are significant differences in terms of the landscape of the game. For example, as a poker player, if you sit down to play, there's a continual cadence of when hands show up in front of you, right? Yes, there are times where the game is going to go a little bit slower or faster, but for the most part, if you sit down to play, you're getting cards. In trading, you sit down to play, I mean, depending on your style, you might not get cards for a month, 6 months, day. I mean, we don't really know. So there are obviously significant differences in just the nature of the game. And so the book, Mental Game of Trading, was designed to really tackle the nuances of what traders are experiencing, which is obviously similar, but still significantly different from poker players.
And tell me this relationship, because we touched upon it just a little while ago. You said that a lot of poker players were turning to crypto as well.
Yeah, I mean, if you think about the style of a person that gets into poker, frankly, even a lot of traders too, but they tend to be kind of counterculture. They tend to be more fiercely independent. Not all of them are libertarian, but they have a slant of just like kind of not wanting the normal 9-to-5 grind. They want financial independence. They want to be able to do what they want. They didn't really always do great in school, though they tend to be quite smart. So there was I think if you kind of look at the imprint of early crypto enthusiasts and innovators, there were a lot of parallels between crypto and poker at that point. And so there were a lot of poker players who, are transacting with others around the world. Crypto just became, especially Bitcoin, became a very, very simple means of transferring money. And, in poker, there's a lot of, a desire to also necessarily be connected, but without having to fully trust the other person on the side. And I'm not saying that, poker players are inherently scammers. I'm just saying that, there can be an inherent distrust at times when you're sending large amounts of money around the world. You do it with crypto, it certainly becomes a little bit more easy to deal with, not to mention, you've got less questions when you're dealing with the banking industry that doesn't really understand poker either. So there were just a lot of reasons for poker players to get into to crypto, into Bitcoin at that point.
Mm-hmm. So your first few clients were probably your poker clients who then went into crypto. What about the rest of your clients? Where did they come from? Was it just word of mouth, or how did you advertise?
Yeah. I mean, I've never done any advertising for my coaching, paid advertising. It's all word of mouth and or book writing, podcasts, writing articles, writing a blog. I had a podcast for a while, 2011, probably 3 or 4 years. So I was probably a little bit early in the podcasting game, but I mean, the books are certainly a nice business card.
Mm-hmm, mm-hmm. Okay, so for golf, you were actually a golfer. Poker, you learned how to play poker. With crypto, did you either learn to trade or to invest?
I mean, I've been involved in investing since I was a kid. I remember in 6th grade, a stock picking competition, and my grandfather, my father, all were stock market. They were involved in the stock market. So I've been around the investing world for most of my life. Again, I was kind of geared towards business from a brain. I didn't want to be in psychology, right? This is kind of a build a better mousetrap kind of job for me, although I've learned to really love it. And I truly do enjoy helping my clients, helping people in general. So it's kind of opened up a different avenue of my personality. So I'm grateful for that. At my core, though, I still think of myself as somebody who's involved in business. And I wouldn't say that I'm a kind of a hardcore businessman, like constantly driven to make more money. It's quality of life matters a lot to me. But anyway, point is that learning crypto, learning about Bitcoin was not something that I was interested in early on. For me, it was just a means of transaction. It was just like another credit card. It just happened to be kind of cool and interesting, but I didn't really kind of dive into it maybe until 2015, where I started to really understand the value proposition that it provided. And so I've never actually learned how to trade. I understand a lot of the indicators and a lot of different systems that are out there, but to me, to be a skilled trader requires an incredible amount of time and effort. I understand what it takes to be a great golfer, to be a great poker player, to be a great athlete, to be great at anything. And I'm not the kind of person that's going to kind of do things half-assed. So that was never my intent to learn it. And I also don't love it the same way that I love my job now and or golf. So I know enough in a sense to manage my own investments, and, occasionally I'll have put on a swing position, but I'm really not, driven towards, like making it an income source on a monthly time frame. It's more of a long-term investing. And for me, any investments in crypto, I'm holding for decades plus.
So you really do understand it, though. So you might not be day trading, you might not be trading, but you are a what's its name? An investor. So just quickly, you mentioned 2015. Again, that's super early. 2013, like we said, was the bull run. 2014 was the bear market. 2015 was the recovery year before we had the halving and the 2017 bull run. Again, so super early. Do you notice more people come to you in a bull run year or a bear market year? When do you see the most work?
I mean, it's generally not in a bull run. Nobody's saying, "Hey, help me to, like not mess up this spot." It's generally when they've already, had some massive mistakes, and the bear market can be fairly unforgiving. I would say it sometimes is kind of coming out of that, where you see it where they have in previous markets, and this is true of traders on an institutional front. I've got a fund manager who, we've talked about how, you just kind of get chopped up in ranging markets, and then you're kind of left with less ammo for when the next kind of leg up or the next bull run occurs. So most people are kind of blind to their own weaknesses, blind to their own overconfidence, as is the euphoria that would kind of characterize a bull run. Doesn't mean that you're necessarily getting swept up in the same kind of euphoric FOMO that exists there, but it is easy to justify moving profit targets, justify some looser entries, and they don't get punished. I mean, price rips up, and you're now a genius because you get close to top ticking a particular move. I don't mean the entire move. Time frames could be 15-minute charts or daily charts, but the idea though that you're just not kind of getting punished for that looseness and that lack of sophistication in your strategy, is not going to lend itself to come to somebody like me. It's going to be after you've chopped up 30 to 40% of your account, and there's a lot of blood in the spilled here, and so it's not also kind of in the early stages of the pullback, because they're still fighting, right? It's not until they kind of relent and where the idea of, okay, well, I don't want that to happen again, so how are we going to prepare for it? But like I've told a lot of clients, when you are doing really well, that does not mean that you are immune to mental and emotional issues, right? They can come at any time, and generally we are ourselves individually, we're kind of reacting in patterns that occur very similarly to what exists in the market, meaning that there's constant changes, but there's a lot of similarities and markers that occur that allow you to create an edge. So to me, the edge here is understanding your own weaknesses, understanding your own patterning. Historically, they're going to happen again. The question is, are you prepared to actually correct them? And I'd say a lot of people think that they are because they're experienced. They know what they're looking for, but just because you know what you're looking for doesn't mean you know how to correct it or stop it. And those are two very different things. Awareness is not a solution. Awareness gives you the option to apply a solution, but it is not a solution.
And how many people are there like you who specialize in the cryptocurrency space?
I'm not sure. I mean, there's not a lot of like trading psychology coaches out there, in general. So I'd say less than a dozen, probably. There's probably some that are smaller, but I think like a lot of things, you kind of get what you pay for. So, and I'll give you one example, because I had an intern that was working under me when I was working in the esports space, and theoretically his hourly was 1/10 mine, and when I was talking to the owner of the team, I'm like, look, we're talking like apples to cars, right? We're not, you can say, okay, well, this is how much I charge, this is how much he charges, but there are things that he's not going to be able to solve at this point in his career, just like I couldn't when I was 2 to 3 years in. And I thought I could back then, but I couldn't. And again, you compare a trader who's got, and I'm talking about like an experienced, seasoned, profitable trader who's got 15 to 20 years of experience, right? They understand market movement different than a trader who's been around for 18 months or 5 years. It's not to mean that neither one of them can't be making money. I'm just saying that the amount of wisdom and experience is sometimes exponential, and sometimes it's functionally different. They're not comparable. And I'm not denigrating any of the other professionals that are out there. There's lots of different avenues and options for how to create value from a psychological standpoint. Again, from my standpoint, I needed more of what I provided. So if you're somebody who's kind of stuck in a cycle that you can't break out of, that's where I come in, because the common advice out there, which is pretty much everywhere now, hasn't helped you. So that means it's not a knowledge issue. It's not an awareness issue. It's that you actually don't understand what's producing or causing the FOMO, the revenge trading, the tilt, the lack of confidence, the overconfidence, the discipline issues. You know what's happening, and all the common advice as to what you should do theoretically should work, but it's not, because there are unconscious biases, flaws, wishes, illusions, all this stuff kind of running in the background of our minds that are actually producing those reactions. If you can't manage your way around them, right? The intensity of those emotions they override higher brain function. Higher brain function is where emotional control lives. So here you are dealing with intense emotions, less ability to fight against them. I mean, it's a losing proposition. It's a negative EV game. So you want to prepare yourself well for a game that is more complicated, and it's not more complicated for everybody. But if you're in that category, then you need more robust advice, and that's exactly what the book does.
So you're very, very specialist in this field, and there's not very many people like you. Let's go to 2021 now. So 2021, we'll talk about the book a little bit more. So 2021 was a bull run year. We started off the year around about $30,000. We went up to April 2021. We made a local all-time high at $64,000. The China FUD hit. We ranged at $30,000 after the China FUD for a good couple of months. Bitcoins were taken off the exchanges, and because of the supply shock, we made the actual all-time high, which was $69,000 in November 2021, and then we slid into a bear market. Now, for anyone, what I've just explained, that seems horrible. It seems like it was a very, very, very difficult bull run, and it was a very difficult bull run. It was very, very confusing. So you were active in this bull run, and you were helping people. What was your experience of the 2021 bull run?
I don't remember exactly how it differentiates from other ones, but I mean, I think the biggest one was just you had a lot of the DeFi stuff in there, and I think people were kind of getting swept up in it, obviously, mistakenly so. And I remember at times where I had some clients basically saying, like, just being so aggressive around the opportunity that was here. I mean, here you could somehow be making 5-10% staking your coins, and seemingly just kind of like printing money out of thin air. And it's kind of classic Euphoria. Like, I was very skeptical, and then when it kind of lasted longer, I even started to question, like, maybe I'm actually on the wrong side of this. And of course, Celsius blows up, and the rest is kind of history. So yeah, I think the markers of Euphoria, really do differ, kind of bull run to bull run. You talk about kind of some of the altcoin stuff that was occurring there too, with Sheeb and Dogecoin, and like just a lot of the different kind of altcoins just kind of coming and popping. So yeah, there is a lot of euphoria that gets generated, but there's frankly a lot of people that are incredibly well skilled in being able to capitalize on that. So they pump and dump stuff, and like it felt like that was a more sophisticated operation at that point, having gone through 2016, 2017. And frankly, now as we're looking here, I'm not trying to jump too hard ahead, but like, this bull run, which we're now, firmly in, and who knows exactly how much is left, but, I think the best pundits out there suggest it's not that much longer. But there are markers for it, especially as you look at some of the Bitcoin treasury companies, and a lot of the euphoria that's existing there. So again, I think for yourself individually, you got to kind of look at, like, what are the distinct markers of euphoria that's going to create some problems for you. And generally speaking, it's getting swept up in upside outcomes without really understanding downside risk. Right? You can be aware of downside risk, you can calculate downside risk, and I think if you're doing that and coming to some measurable understanding of some probabilistic outcomes, to me, I think you're doing a decent job of being sober here. You might still make a decision that is a bit overconfident or a bit euphoric, but if you're blind to downside risk and you only see it going up in the near term, I mean, you are by definition overconfident. Frankly, even if you believe that 5 million per Bitcoin is inevitable in the next 10 to 20 years, I believe you are delusionally overconfident. Why? Because you've got 100% guarantee. No one freaking knows. If you were truly a psychic, right? You wouldn't be listening to this conversation right now. So you're not psychic. You don't know exactly what's going to happen. You can say with 99% certainty that this is going to happen. Fine. there's your probabilistic outcome. You can bet on that in a proportional way, but you got to be aware of the 1% downside. And that to me is where that line gets crossed, where you stop thinking in probabilities and you start thinking in certainties.
So with the euphoria in the 2021 bull run, I understand, so most people came to you in 2022, 2023 when the bear market was in full swing. But should people actually be coming to somebody like you in the euphoria part?
I mean, you use the word should, and so that suggests kind of the expectation. I think people should understand the value of somebody like me at all times, period. And those of my clients who I've been working with for 2 to 10 years, they do. And then so we kind of go through different cycles. It doesn't mean that I'm always talking to them during a bull run, or it's like they understand that when they're not sharp and they're not able to get themselves sharp themselves, then they reach out for help. And that's the point. So, I think a lot of people don't know that they're not sharp in a bull run because that euphoria is, clouding judgment. So yes, you should be aware of your mental and emotional state at all times. I don't mean every single minute of the day. I just mean, on a daily, weekly time frame. Like, you need to understand whether or not you're, in a stable, emotionally state. And if you're not, for whatever reason, whether it's because it's the despair of a bear market, the despair of having lost, good chunks of your wealth, or in a euphoric state, like, the risks to me are equal. You're going to make mistakes. You're going to lose money, in the long run. And the problem is that with the euphoria, bad behavior gets reinforced in a positive way, which then oftentimes leads to the bad behavior that gets punished in a more significant way in bear markets. So yeah, there's definitely a correlation between those two. I don't make decisions for people. I just kind of lay out the facts and let people make their own decisions. But sometimes they have to go through a lot of pain in order to know what's correct for them.
They do, yeah, sometimes. Oh my gosh. Okay, so the book came out in 2021. We've spoken about the bull run. So 2022 was the bear market. 2023 was the recovery year. How busy did you get in those years? Considering the book come out, so you're known in the industry.
Yeah. I mean, and there's been a large influx of traders in general, not just crypto traders, and also institutional clients. And so yeah, I mean, I've been, I'd say, as busy as I want to be in that period. Trying to create more opportunities for assistance. So I've got a community called the Mental Game of Trading Live, which basically offers kind of coaching in a group environment, so you can get access to me and my advice from a kind of a cheaper cost. So I'm continually looking for avenues to provide value because I only have so much time in a day, and like I said, quality of life is a priority for me. So it's not like I'm doing 40 hours of coaching a week.
Okay. So how do you feel about, so when you were doing golf and poker, you were seeing a lot of your clients face to face. Now, obviously, with crypto, I'm assuming a lot of the stuff is online. How do you feel about seeing your clients online rather than face to face?
Truthfully, after I got into poker in 2007, I was, on Skype talking in, 3 continents a day. So I've been basically pandemic proof and remote for, close to 17 years now. So I do prefer to see people in person. And, with poker, I would go to the World Series of Poker, which is, happening, or the tail end of it is happening now. And I'd work with a bunch of clients in person, and, that was always fun to do. But it's also taxing. It means I'm away from my family, and at my age now, at close to 47, I'm not, I don't have the same kind of appetite for travel as I did before. So you make do with what you got. And, video calling has made it a little bit easier. Truthfully, I think before it was, mostly just audio. Nobody had webcams. So it was just like kind of audio. And I think I've learned to get very sensitive to tonal changes and tone of voice. But now with, kind of video, it's a very close second, we'll say.
So tell me a story about, say, meeting someone and helping them, or changing their crypto journey.
So there's one, there's a couple, we'll say more dramatic examples. Had a poker player who basically played poker nonstop for an entire year, who wanted to basically bet all of the money that he made that year on Hillary Clinton to win the election in 2016. We know how that went. He was able to get a stake. Somebody funded him to, kind of recover from that. And, certainly mentally, I did my best to help recover from that. And then went on to invest in some early ICOs and was, worth 8 figures not too far after that. So, again, I think poker players had a lot of hardiness. And this is a client that I worked with for years. So, I'm not by any means suggesting that you should be spending large portions of your money on a big bet like that. But the ability to recover from that, I think, was something that was a byproduct of the work that had been done before. Because it would have, destroyed a lot of people, and they wouldn't have been able to recover from it mentally or emotionally. And so, their ability to do that, I think, is a byproduct of the training and experience they had from poker, and just the nasty intensity that the game can kind of dole out. I think there's a lot of, crypto people that are kind of new and haven't really experienced kind of the full cycles. That they, at times maybe have had, delusional overconfidence and putting big bets on, not because they had deep conviction from it, wisdom, experience, but just because they wanted to make a lot of money really quickly. And that was not what this client was doing. It was a very calculated bet, probabilistic bet. Turned out to be wrong, but that's poker. I mean, if you're making calculated bets, it's I think sometimes a lot easier to handle losses than when you're making emotional decisions, because there's not much system to it. There's not really much to learn from it other than, well, I need to kind of mind my emotions. So that kind of one example. Another client, well, I'm not going to say the number, but it's, very large, kind of spot holder, and had just kind of really struggled with the scale of the account. And I think people often think about, what life is going to be like when they reach 7 figures, 8 figures, 9 figures, whatever. And they just imagine, again, it all being kind of perfect and rosy. But the reality is, more money, more problems, right? More money, different problems, more money, different challenges. So yeah, sometimes it's like really kind of acclimating to a new, atmosphere, in a sense, a new, and for this particular person, had to do with friends, had to do with family members, had to do with their own decision making within how to kind of manage money like that, and to figure out what their kind of next goals are. Because if you get caught in a spot where you're not really motivated in the same way that you were before, it can feel almost depressing, right? So you kind of have to reorient yourself to new goals and new aspirations. And frankly, that can happen, even if you've made 10K, right? All of a sudden now you've got money that you didn't have before, and make 100K. To reorient yourself around, different goals and different priorities is an important thing to do at any level. If you find yourself in a spot where you're not really as passionate, you're kind of caught in a spiral of living a life that doesn't fit with you. And, especially in the social media world, it's just very easy to get kind of swept up and sucked into this kind of constant content consumption, and lose sight of who you are, what you value, what you want to do with your life. And sometimes all that content can be, nice fodder for understanding the range of options that are out there. But at a certain point, you've got to consolidate and figure out what matters to you. And that's what, I spent a good chunk of time doing with this client who, basically had enough money to survive for the rest of their life. And so, yeah, there's challenges at every level.
Mm-hmm. So what's the most, how do you diagnose someone? Let's do that first. I was going to say, what's the most difficult part of your job? I'm presuming it's actually diagnosing or finding out if it's anger, or if it's confidence issues, or discipline, or greed. Is it that?
No, that's actually one of the easiest things, at least for me now. Like I said, I think if I were to look at like how my skill and competence has grown in the last 15, 20 years, it's the speed of diagnosis. So what might have taken 4 to 6 sessions sometimes takes 5 to 10 minutes. And it's aided by a questionnaire. I have clients fill out a fairly detailed questionnaire in advance. But the ability to kind of diagnose problems is sometimes the easiest, is most of the time the easiest part. The hardest part is getting them to kind of fully buy into what it's going to take to actually fix it, engage in that process, and do the work. Again, people oftentimes come in with an inherent bias of this thing happening quickly and easily, and it's just not that way. And so there's nuance and there's challenges to continually go. It's like, to really change this could take 3 to 9 months, right? I mean, I'm sure you've heard the old adage, 21 days to change a new habit, right? You have a habit that you don't like, you're not eating well, you want to go to the gym more often, you bite your fingernails, whatever it is, right? And it's like, all right, 21 days, 30 days to change a new habit. Okay, you can acquire some competence in that time period, but you cannot achieve mastery where you can't not do the wrong behavior. Right? There's a very different degree of competency between knowing what to do, how to do it, and then learning it so well that you can't get it wrong. And that's the gap that most people don't understand and struggle to actually kind of work themselves through, to that end goal. So yeah, that's the harder part, is like really figuring out what's going to keep people engaged and truly bought into that. And as much as I say it in advance, once you're living it, it's just easy for you to become kind of overconfident with that process and think that you're farther along. You stop kind of working on it, and then you regress back in those, in a trading sense, your FOMO and revenge trading, whatever, comes back out. And especially because the life cycle is very different here, right? This is not a scenario for the most part where you can get firm evidence of mastery in 21 days. I mean, you have to go through many different market cycles. You have to go through different, income levels and account size and different stages of life before you're really able to firmly say, I will never succumb to this again. Doesn't mean that you can't make progress. Doesn't mean that you can't reduce the probability of those things occurring by a significant margin. But you cannot say with absolute certainty that you've achieved mastery until you've gone through a lot of different variety of challenges and kind of pass those tests. So to get people to fully buy into that is by far the bigger problem. The diagnosis is pretty easy for the most part.
That's so cool. That was not what I was expecting. To be fair, when I read your book, and I must admit, I absolutely love your book. What I really, really liked about it was how you went through greed, all these emotions: greed, fear, anger, confidence, discipline. And not only did I actually learn what these emotions were, I thought I knew what they were until I read your book. And then I was like, oh my God, that's like, yeah, it was very, very eye-opening. So with your book, who helped you with your book? Or was that completely you?
So, I mean, I have like a co-writer who, comes more from the English literature world. She was in communications at American Express and, understands my style, my system, et cetera. And for me, I'm much better at kind of talking out the early phases of kind of the iteration with a book. And so we kind of build these like layers, and I can do that best by talking. And she became kind of the person who would, not just like kind of take dictation, but would try to make sense of it and create some structure. And so we go through a couple rounds of that. And then once we had the structure and once I kind of knew, then it was all about kind of like me getting in there and doing the writing and the revisions and adding in the details and the stories and that sort. And then of course you go through the process of hiring an editor and a copy editor and a designer and a few other people to kind of make the whole thing look like a book that was published by we'll call seasoned professional publishers, but obviously it was all me.
Mm-hmm, mm-hmm. You must have heard, because I know a number of people have said that this is the best trading book that they've read. I
have, and I appreciate the kind words for sure. I think anytime you can help somebody that you never met is a pretty special thing for sure.
Mm-hmm, mm-hmm. So you put everything into, is it 5? It's five different emotions. You put everything into 5 different emotions. How difficult was that?
I mean, some of the structure came from poker. I mean, I think at that point, like the order of it was a bit different. Greed was not really a topic that was explored in poker before, but as I talk about in the book, like greed isn't really a thing either. It's a term that gets thrown around a lot, but as traders, as investors, right, your job is to try to make money. So to me, that aspiration is not greedy ever. uh, it's greedy when you define that your attempts to make more money are violating your own rules for reasons that you don't understand. And when we look at that, it's not really about greed. It's more about fear or overconfidence or anger. And so those are really the emotions that are kind of more at play. But the structure of it wasn't the hardest thing. It was more, how do I present it in a way that is going to help people to diagnose things for themselves. And that I can see why your question was kind of geared that way, because it's easy for me, but it's harder because you and others that are listening, like you have fractionally the same amount of knowledge and experience that I do at going through that diagnostic process. And it is always harder when you're doing it for yourself, because now here you are trying to get into your own mind and saying, okay, well, I do feel this FOMO at times, but is it really connected to anger, or is it more about confidence? Or, I do have this fear at times, but maybe I'm actually fearful because I get angry at times, and I'm kind of fearful that I'm going to get pissed off and angry at myself. So there can be complexity when in trying to go through that diagnostic process for yourself. But I kind of laying out the book was attempting to make it as easy as possible.
Mm-hmm. Tell me about your community.
So not large, but it's a group of people who are just dedicated to doing the work and willing to do that self-analysis and wanting to just kind of join others in that process. It can be a very isolating endeavor. You can kind of benefit from having a little bit of accountability, and then ultimately it's like kind of having another set of eyeballs who can help to diagnose and provide feedback on the issues you're experiencing and the work that you're doing. So yeah, like I said, it's a way to get access to me in a much like kind of lighter, easier way. And at the end of the day, you're doing the majority of the work, but you have to do it kind of with other people and with a coach who can kind of help guide you through the process.
Mm-hmm. I'm going to put all your links down below, so it'll be easy for anybody who wants to get in touch. Okay, so what's next for you? Because the way that I see it is that you've done an awful lot in quite a short space of time, bearing in mind this is like quite new, this route, the cryptocurrency and all the rest of it, especially trading in cryptocurrency, because cryptocurrency is very, very volatile. So you've written the book, you've got your community, you go on podcasts, all the rest of it. What's next for you?
I've been and trying to still play some high-level golf myself. Like I said, I'm not too far away from being able to try to qualify for the U.S. Senior Open, although I did try to qualify for the U.S. Open again this year. Qualifier was at my home course. I was close, but not close enough to, unfortunately, this year, a couple shots away. So yeah, still trying to play golf at a high level, and golf still is a love. So I'm working on something for golfers to try to augment that. Within trading, I'm going to continue to be around. I'm not going anywhere for as far as I can see. Retirement's a far away, and I'm not sure that I would ever truly retire. We'll see. I mean, you get to be 75. Who knows what decisions you're making then? But no dramatic pivots or changes. Just kind of taking the next couple of years as they come. Who knows what exactly what's going to happen with Bitcoin and crypto over the next couple of years either. But I think as long as there are people who are driven and motivated for their own financial autonomy, then there's going to be lots of people out there who are looking for kind of guidance and assistance in figuring out how to truly be able to kind of own their path. And I'd say that because you do have to think about mental and emotional freedom as being one of those freedoms, not just like financial freedom. You'd be financially free, but mentally tormented. So, understand that sometimes the path, the road to getting where you want to be, oftentimes includes cleaning up a lot of mental and emotional stuff. And in doing so, you give yourself both the option and advantage to having success there, but also then being able to enjoy it once you do.
So, Gerard, what would you say is your greatest achievement?
I'd probably say something regarding my family. I've got a pretty great daughter, although I can't take full credit for that. But I would say, yeah, I think, yeah, being able to help people that I've never met, I think is something, pretty unique. And people from around the world, in different cultures and different stages and places in their life. And yeah, I think if like I was obviously driven to be a professional golfer. Had I done that and been successful, I'm sure I would have had a great life and would be very happy. But you kind of think about that endeavor. It is more of a self-interested, selfish kind of endeavor, and that's not denigrating it, like I said. But now having kind of been on the other side to experience what it's like to actually truly help people, that is pretty special and something that has scratched an itch of a different side of me. That I'm really grateful for and happy about. I think at the end of the day, I love puzzles and I love solving problems, and people are about as complex as it gets. So it's kind of the ever unfolding puzzle there. So yeah, I suppose that would be the accomplishment.
Mm-hmm, mm-hmm. Okay, awesome. Well, that's absolutely brilliant, Gerard. Thank you so much for coming on, telling us a little bit about your crypto story, a little bit about what you do. It's all fascinating. We should get you on back on a live stream as well, get people to send in all their questions. By the way, I'm going to put all the links down below. I highly recommend Gerard's book. I've read it cover to cover, and I think it's absolutely amazing.
Cheers. Thank you very much for that.